Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. I am recording this early Friday afternoon this time because we had the Fed powwow on August 26th. And as I record this, the NASDAQ's down 350 points or whatever, just so I didn't want the video to be out of date right after I recorded it. So overall, obviously, we're in a pullback phase. We've had 4, 5, 6 maybe good weeks on the upside. Now we've been pulling back pretty sharply here, including today's, Fed-induced pullback, so to speak. What to do really depends on, I think, what you've been doing. When you just look at the evidence, not a ton has changed. I mean, yes, we were rejected from the 200-day lines, which I'll get into and all that. But the intermediate term trend by our measures is still up for most indexes, really almost all major indexes, most growth funds, and a lot of stocks. But the longer term trend is still down. And meanwhile, some of the secondary stuff like new lows and our aggression index, which is kind of growth versus defensive stocks, they're just kind of back into sort of, I don't want to say neutral range, but kind of in this in-between phase, which was the title of my Cabot Growth Investor last night, where it was just like, there's a lot of evidence that, the bear overall might be over. A lot of stocks have hit their lows for the cycle. However, it's clearly not like there's a ton of stocks, racing higher, breaking out of like great consolidations. It doesn't feel like the institutions, they're doing more dipping a toe in as opposed to piling in, okay? So from here, we'll just see what happens. I think if you've been buying a lot of, junky stocks, really piling in, getting aggressive, betting on stuff, so to speak, I think, yeah, then you got to be a little bit careful. If you've been going slow and selective and trying to sort of shoehorn your way into a few of these leading stocks or whatever, half positions and stuff, and you have a little cushion, I think you can wait and see how this whole thing plays out. Is it possible this is a leg down? New bear leg down and we hit new lows. It's always possible. Yes, you got to be aware of that. But I just think the evidence at this point, I'm not seeing a ton of, weakness out there among individual stocks. That's really been the most encouraging sign of the past week, is whether it's growth stocks or really just a lot of stuff that's shown up in like Cabot Top 10 Trader. There's just a lot of stocks that have been working, that are pulling back normally, that are consolidating. They're well above their correction lows today, whereas the NASDAQ's hitting a new correction low. So we'll see how it plays out. In Cabot Growth Investors Model Portfolio, we did some rejiggering last week, but no real added exposure. We're still like 57, 56, 57% in cash. And I think we own actually, maybe 3 or 4 future leaders if the market can hold itself together. So I'm willing to be patient, but that's within the context of kind of having gone slow and all that. So really take it on a stock by stock basis and then keep your eyes on the market here closely. Not the news, but the market, to see what happens going forward. Okay, enough with the preamble. Let's hop into the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily, as I get my notes out here. Okay, so as I said, let's see, I got my pen out. Yeah, so this is the NASDAQ. To us, above the 50-day line, which is still rising, is still intermediate term uptrend. This is a little sharper than I'd prefer, of course. I just prefer the market kind of kite higher and have sort of a lockout rally, but that's not, the market doesn't care what I want. But still, it's ugly today. We'll see how it goes. It's kind of back into this area, which, was a little bit of support resistance here in late May, early June. So we'll see what happens. And all the other major indexes anyway are kind of in the same boat. You have, here's the S&P 500, a little weaker, but again, daylight above the 50-day line. IWM, this is the Russell 2000. MDY is the mid cap. They all pretty much look similar. Now, I know I have gotten a question or 2 or 3 or 4 on, we hit the 200-day line and we're rejected, and what does that mean? I've seen studies. Yes, there's a few instances where that happened in 2008, and it happened in 2002, and the market just imploded afterwards. Could it happen this time? Absolutely. Could totally happen. We're still in a longer term downtrend by our measures. But there's a lot of times that's happened and the market's pulled back, held up, and then kind of, constructed things differently down the road. So I wouldn't look at that as some ace in the hole, bearish ace in the hole, so to speak. Okay. One thing I just wanted to touch on, and I kind of mentioned this in a Twitter space, I think that was last week, and then in last night's letter. Bottoms are a process, not an event. Now, I mean, it's easier to say that now that the market's pulling in, but whether it's a retest or just some, a higher level of something, or, some people are going to come up with some chart patterns, like an inverted head and shoulders. I mean, who knows? But I think in general, sometimes the bear can end and most stocks can hit their lows before the bull really begins. And that sounds like I'm talking out of both sides of my mouth, but let me show you an example here. This is the spiders. Let me show you the NASDAQ. This is the NASDAQ in 2003. Now, this is a different animal. This was like a 3-year bear market. This was the internet bubble bursting. But this is October 2002, what I'm highlighting right here. And this was the low. This was the low. And a lot of stocks like Cisco, and in fact, maybe I can look at Cisco. This is kind of cool. So you can see how Cisco kind of really had this sharp rally and then consolidate. And actually, this went on to a pretty good run the next year. But the point is a lot of stocks did hit their lows here. eBay, Yahoo, I think was had really blasted off right off the low there. But you can see the market had this huge quick rally. I mean, when I say quick, a few weeks into the 200-day line. And then it kind of chopped lower, and then it came in. This was Iraq War 2.0. And then we blasted off right here. You can see this period of time here. This was in March of 03. This is really when the bull market began. And if you look, in fact, that chart I just had up before, there really wasn't a lot of, you had a little selling pressure here and there. But you can see it was a pretty smooth ride for many months, really almost a year and a half or a year and a quarter without a hell of a lot of selling pressure. My point being is that sometimes the low can be in, and most stocks hit their lows back in October. But whether it's a retest or a bottom building process, sometimes it takes time before we're ready to get going. Maybe that's happening here. I don't want to draw too close a parallel saying, oh, we need to pull back X% or this many months. My point is just like maybe June, or for a lot of growth stocks, maybe May was the low. And now we're going to kind of get into some futziness here for the next, September, October, or the Fed, whatever, and see what happens down the road. But it certainly seems like there's still a decent amount of stocks, a lot of stocks that are acting pretty well. So let's just get back to the present here. Just something to keep in mind. Again, I want to draw too close a comparison, okay? But, going forward, just something to watch. Heading into stocks here, because I just want to get into charts, there's a lot of commodities seem to be reasserting themselves. So that's just one thing to keep an eye on. Now, this is Devon Energy. Just keep in mind some of these charts aren't adjusted for dividends. If you do look at a chart adjusted for dividend, it really hit the 200-day line almost to the nose a couple of times. Obviously, it's had a good run here. And now it's, it is right back into some of this resistance. It's kind of straight up here. But, overall, it had its correction. Now it's showing pretty good power. Can it pull back? Yes. But my guess is some of these, again, might have seen some correction lows. Diamondback Energy is one that doesn't look quite as good. But, again, my guess is, it might have hit its low. Chord Energy, CHRD. There's some of these newer names. I mentioned this in CGI. Some of these newer names that they were combinations of different firms. Like there's a lot of M&A going on in the group, even though it's, usually it happens at a different point in the cycle. And they merge, kind of a merger of equals. It's a whole new company, new symbol. It's not something people are familiar with, but you can see the stocks within 10% of its old high sort of thing. So we're seeing some of that. Outside of oil, I mean, you have the gas names I've mentioned. This is EQT. It's actually testing new highs here this week. I wouldn't say this is the cleanest looking chart. It's kind of sloppy, but it's moved from 40 to 50 here in the last couple of weeks with natural gas prices up. But even beyond that, you have something like, this is Nucor. It's not ready to go. Actually, you know what? Let me look at Steel Dynamics, STLD. This looks a little bit more proper, but, it had this move. It got hit. It was like commodities are dead. It's below the 200-day line. But now it kind of had this persistent run, and it's pulled back a little bit. And even as the market's getting hit, it's kind of, I don't want to say breakout, but just kind of above a little bit of resistance here. So some steel stuff's acting well. Fertilizer stuff. This is CF Industries. Others in the group don't look quite as good, but, this was the initial kind of Ukraine, the Russian invasion. Fertilizer prices are up. Everything prices are up. Comes down here, the 200-day line, really nicely, hits it, and then, just changes character, and it's almost been hard to buy. It's not like it's pulled back, let you in at all, and then it's kind of broke out to new highs this week. So, maybe it pulls back or whatever, but we're seeing some of that. And then some of the coal stuff continues to look good. Like ARLP has been sort of really didn't correct that much during the whole mishmash with commodities. But even things like an Arch Resources, ARCH, you can see, and it's a messy chart on the daily, but you can see, it's had a huge run, but it kind of stalled out in here. It looked like it could be setting up. It got hit, but again, it kind of held that 40-week line. And as soon as it hit that, 40-week, 200-day line, same ballpark. As soon as it hit that, you can see just over the last few weeks, just really racing right back to its high. Maybe it needs to rest and all that, but we are seeing some commodities come back and play. You can argue whether that's good for the market or not. Maybe it's going to be back to the first half playbook where commodities are strong and the rest of the market is not. But it is something I'm noticing. But arguing against that whole thing is there are still a lot of, I don't know, there's just a lot of stocks that I see that are, I don't want to say growth, but they're either growth or other, just good companies that are acting well. This was Albemarle, I think that's how you pronounce it, ALB. This raced back. You could say this is commodities because it's lithium, but it's kind of a growth, electric vehicle play, obviously, battery play. And you can just see like it pulled back for a few days. This is very short term, so I don't want to get, this action's more important to me. But just even recently, pulls back for a few days. And then as soon as the pressure comes off the market for 2 or 3 days coming into today, boom, 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 into new highs near 300. Today it's getting hit, but nobody's looking at this chart saying, oh man, today the stock is acting abnormally. No, if anything, it's still very extended. It's got some old resistance over here to kind of chew through. So maybe it pulls back more as the 25-day line catches up. But that's one. Celsius, I've mentioned this a bunch, CELH, very volatile stock, moves around, I forget, 6 or 7 points a day. But this was the Pepsi news, kind of got hit before earnings, bounced, came back in, blah, blah, blah. Hit the 25-day line last week, bounded to new highs, getting hit today, but not, doesn't look bad at all. Looks totally normal so far. I'm not trying to say you can't come in and the market drags these things down, but I'm just saying if you're someone who believes in going with the evidence, you're seeing some of these things. This thing could have easily just stayed down here and then gotten hit further today. If the market was really weak today, but instead it's really showing some leadership. There's a few solar stocks look good, but this is First Solar. It was completely changed character. It did bottom out here for months, just as I'm not a huge First Solar. They always have such choppy earnings. It doesn't really fit my methodology, but I can read charts, and you can see after this big decline, it started to bottom out here in March. You can see it kept holding support, and it doesn't take a genius to see, completely change character on the green energy bill. You can just see this massive amount of volume. Just look at all that buying, and this is a big liquid stock that trades $200 million a day or whatever. So this is big institutions buying. And it's really had what I call it's had difficulty pulling back. It wants to pull back, but it can't. They're not letting it. And then even today, it's up higher. So, things like that. On semiconductor, I mentioned Wolfspeed. Actually, did I mention Wolfspeed before? So Wolfspeed gapped up on earnings here. It's silicon carbide. I don't want to get into the story too much, but it had a huge correction, chip stock. Didn't set the world on fire, but started notching week after week after week up in a row. And then last week it had kind of a coming out party here on earnings. I think it was like 8 or 9 times volume, up 30% or whatever it was. And it's actually followed through higher. Again, it's pulling back today as I record this, but looks, if anything, you kind of feel like maybe it can pull back further for you. On semiconductor, ON is another one. You can just see on the weekly chart, sloppy today. But as I record this, we'll see what happens. It's pretty much flat on the week, but 1, 2, 3, 4, 5, 6, working on 8 weeks up in a row, maybe. We'll see. And getting hit today. It is getting hit 5% today. But again, no one's going to say that this accelerated uptrend is over, or even if it is, that it's, all of a sudden coming back down here. Some of the not off the bottom, but some of these like recent IPOs. So this is GitLab, GTLB. Talked about this before. Hasn't set the world on fire, but kind of bottomed out here. This is great volume cluster. Big earnings move here. This was back in June. It does have earnings here on September 6th. But just you can see it's the chart's a little squished, but take my word for it. It kind of got above 60, went up to 70, back to 60-ish, starting to bounce off the 50-day line. So we're seeing this is an example where it did pull back sharply for a few days, but kind of normally still respecting the 50-day line. We'll see what happens on earnings, but just seeing some of that action where it is sharply pulling back, but normal. Then you just have some good companies, like this is Will Scott Mobile Mini. It's not as exciting as like a super growth stock, but big into good numbers here, good cash flow. You can see the sales and earnings picking up steam, 26% sales. Beautiful persistent run before and after earnings, and now it's chopping around again, getting hit today, but looks totally normal. Maybe a pull into the 25-day line would be interesting. I've mentioned Chart Industries before. This is GTLS. It is still futzing around a little bit. You can see it's kind of, I wouldn't say it's really up and out, sort of breakout, but it had this, big thrust higher here on earnings, and it got up here, and now it's just pulling back here into the 25-day line. Not like there's huge volume down here. I'm just pointing these out as normal pullbacks. They could become abnormal, but so far in this week-long decline, they haven't. Okay, this is WW Grainger. It's a $500 stock, but still, and not changing the world. You can see it's not the biggest mover, but kind of had this long sort of drawn out, almost 3 legs down, and then really popped to new highs here, and just really no, again, down today, but no weakness, well above moving averages. Carlisle Company, again, $300 stock, but CSL. These have been in top 10. We're just looking for strength and where the money's flowing, and decent, halfway decent entry points. But a couple of, tests of the 200-day line, test. When the pressure came off the market, big move. And so far, nothing abnormal there, okay? Some of the biotech stuff, which has slowed down, but here's your big breakout on Neurocrene. This is NBIX. To be clear, let me start with the weekly. I wouldn't say these are in major uptrends quite yet, but you can see the relative performance line bottomed many, many months ago, and it broke out above, I think it was $100, right? Yeah, $100 in here, and it's just been holding firm. Can it break down? Yes, maybe, but so far, certainly doesn't seem like there's any desire here, no volume pickup or anything. BioMarin, BMRN, same sort of pattern here. Kind of had this, call it a handle if you want, but kind of, this big thrust higher on earnings, right after earnings. And now it's pulled back into the 25-day line. Let's see how it goes, but if it starts to resume, it looks totally normal. And then even this week, we saw back sort of on the growthier side of things. This is Palo Alto Networks. Again, it's not free and clear, but it was looking totally fine into the March-April rally when the market got nailed. It finally got caught up in the soup here, but you can see on the weekly chart, it's really been pretty tight, I want to say, almost around 500, high 400s, 500 for a while. And then this week, it gapped up on earnings, pretty good volume, good numbers. Again, getting hit today, but looks normal. So, just overall, that's my biggest thought right now. I'm not trying to excuse what the market's doing here and just saying, oh, well, this doesn't matter at all, and the only thing that matters is what Grainger's doing, something like that. No. Obviously, if the NASDAQ's down here next week, I'll probably be sitting here saying, well, we went from 57% cash to 70% cash or something like that. No doubt about it. But at this point in the pullback, I want to say, number one, nothing has really changed with the intermediate term trend. The longer term trend was already down, so that hasn't changed. Some of the internal secondary measurements have gotten a little bit worse, but not clearly a sign of the sellers are killing everything, and that fits with what we see with individual stocks too. Okay, so again, I just think it's kind of where your portfolio is at. If you were piling into Bed Bath and Beyond and all that and didn't get out, those sorts of things, you're probably under a lot of pressure. You got to pare back, make sure your losses are under control. But if you've been going slow and steady, and you're lucky enough to have 2 or 3 or 4 stocks that are looking good, that look like potential leaders that are coming back, or whatever you want to say, and they're pulling back normally, and you still have a lot of cash, I think you can kind of see how this goes. Maybe it's another leg down, but maybe this is just kind of part of the bottom building process. That could play out a little bit and be frustrating, but maybe this is just part of the bottom building process, easy for me to say, as this bear tries to transition into a bull. Okay, that's all the time I have for today. As always, thanks for listening, but be sure to come by again next week for another Cabot Weekly Review.